What's up, Outliers? Another day, another dollar, and now another stock market shutdown. Not stock market, broad US government shutdown. So, what's happening? These kinds of market effects are some of actually the most interesting things for me to look at from a practitioner's lens. And it's because when we think about market effects, sometimes things like this that are less common and pretty high profile can cause really interesting reactions. So let's start with a general research premise. So anybody that follows my approach to markets, you know that I care mostly about profit mechanisms. And with profit mechanisms, these are literally just market effects that we can monetize. Different market effects offer different opportunities. If we think about something that I commonly refer to, the momentum factor. This has been around literally for decades. Pretty much one of the most highly studied, documented effects that exist in the stock market. When you look at the yield that you get on something like the momentum factor, it's not massive. There isn't some sort of big fat edge in the momentum factor. Why? Because everybody knows about it. That's precisely why. This isn't something that's unknown. It's something that has been under a microscope for a super long time. What does this have anything to do with US government shutdown? Simple. When we're thinking about these different kind of profit mechanisms, you already know a massive part of our exercise is profiling the profit mechanism. In this exercise, we gain an understanding of how this thing tends to behave. What you'll notice is that things that occur very frequently, or have a lot of eyes, or have a lot of involvement, tend to be priced pretty well. A great example of this is earnings. Earnings, we know what's coming up. We don't know what the outcome is going to be. So vol tends to be priced a little bit fat coming into earnings. But if you applied a non-discretionary approach and you literally just traded short vol through all earnings, the probability of you coming out of that earnings cycle making a bunch of money is very low. What does that mean? It means that even though there's this unknown event coming up, it's priced pretty well. With things that happen infrequently or things that do not have significant coverage offer much more opportunities. And it's because the pricing of those events take longer. So let's put that in the context of a government shutdown. If we think of this as a profit mechanism, what's the market effect that exists here? Well, the US government shuts down. Does that have an immediate impact on something? Absolutely. How severe is that impact? As usual, it depends, but there is an impact. That initial impact still counts. So what kind of impact am I referring to? Things like economic reports might not come out on time. One of the fun facts, in case you didn't know, when I was in the Marine Corps on active duty, the government shut down while we were there, and some of our contractors and stuff, they didn't come in. But if you're on active duty, fun fact, nobody gives a shit. You're going to work anyways. That's military life. Pretty simple, fortunately. But the civilian contractors and stuff weren't there. So there's an impact. Now, if we look at those two data points that I was just referring to, the first data point of overall impact being how widespread it is, So we'll call it popularity. The other thing is the effect itself, like whatever the effect is and whatever it impacts. So if we build kind of like a little graph that helps us understand two things, probability and severity. For those military types out there, if I drew 4 boxes like this, you would know this as an ORM, operational risk matrix. But the severity of a government shutdown can be high. The probability of a high severity issue stemming from government shutdown is not super high. So it'd be kind of like here, high potential severity, low potential significant probability. How popular or how well known or widespread is a government shutdown? Super. Everybody and their fucking mother knows about it. Your grandma, who doesn't know what day it is, probably knows that there's a government shutdown at least looming. Whatever the ultimate impact is, whether or not it happens, that's a different story, but probably knows. It's because it's a big deal. It's a huge talking point. And if we deconstruct what a government shutdown looks like broadly, it's also a lot of political bullshit. So as we know, we have a left side and a right side, and they are children that cannot compromise with one another, because if they do that, it somehow admits some sort of weakness in a position. So then we essentially just build these two completely isolated buckets that just say, fuck you to the other one. Yeah, that's going to go super great for a negotiation. Always the best starting point for a negotiation. So the reason why this matters is because when I've deconstructed this market effect, there's so much performative bullshit that goes in with it. It's actually very difficult to fully tease out the details. Now, I'm going to refer to a document that I've built over the last 20 years doing this, and I've studied every single government shutdown that has ever happened. I studied the stock market performance before the shutdown, during the shutdown, after the shutdown. I've done this for all of the major indices, all of the major sectors, all major volatility products, all major commodities. Spent a lot of time looking at this because, as I said in the beginning, it's generally interesting to me. So I am going to go through some of the wave tops. Now, for those that are in the Outlier Pro community tomorrow, during the skill development segment, we'll spend a little time double clicking into this instead of doing the monthly AAR, for me at least. I'll put that in the Discord just because there's a lot going on here. And it's a fun effect to double click into pretty significantly. So let's talk about these wave tops. And I thought it would be cool for us to actually look at first what the media says. I have not read this yet. I have this earmarked. I have 2 of them. 3 of them. I lied. 3 of them, not 4 of them. I have 3 of them earmarked for us to look at together. I've not looked at any of these. And my first research question here is, out of pure curiosity, how does the media talk about this? Why does that matter? Because the way that the media talks about this can have an impact on some people's investment decisions. If you are an educated trader or investor, it should not. But a lot of people aren't necessarily that. So let's start with Wikipedia, hopefully the less bias of the group that we're looking at, and just focuses on the details, right? Like what's going on. So let's see. It says, occur when funding legislation required to finance federal government is not enacted before the next fiscal year begins. In a shutdown, the government curtails agency activity services, ceases non-essential operations. This point is important. Non-essential operations. As I mentioned, being in the military, essential operation, you don't shut down. You go to work. So there is absolutely not this cascading effect where everything comes to a grinding halt. Not the case. In this scenario, non-essential activities stop until funding is eventually passed. So furloughs non-essential workers and retains only essential employees in departments that protect human life or property. Shutdowns can also disrupt state, territorial, local levels of government just because of passed down effects and the relationship between federal governments and local governments. There is interplay, very common. Funding gaps have led to shutdowns since 1980 when Attorney General Benjamin Civiletti, didn't know that dude, issued a legal opinion requiring it. So for those that don't know, the budget dance that we do wasn't always a thing. So this dude, I didn't know who it was, but this dude is the one who says, yo, we should do this. This opinion was not consistently adhered to through the 80s, but since the 90s, all funding gaps lasting longer than a few hours have led to a shutdown. As of February 24, 10 funding gaps have led to federal employees being furloughed. 10 funding gaps. Why am I emphasizing that point? Because when we're talking about profit mechanisms, the frequency of the profit mechanism matters a lot. So we can see now we're chalked up to another one, 1 October 2025. Mark the date, because we out here. So the most significant shutdowns include the 35-day shutdown. 35-day shutdown. Why am I emphasizing that point? Because when you're researching things like this, context windows matter. So we're getting an understanding of some base research questions, again, that I will give you the shortcut to in a little bit. But as always, more important to me is not just giving you information, but teaching you how to find it for yourself efficiently. So right now we're profiling the profit mechanism. We're literally starting with just base research on what this thing even looks like. So now we have an idea of duration. This is being flagged as one of the more significant shutdowns. 35 days, 1819. During first DJT administration caused by a dispute over the barriers on the U.S.-Mexican border. 21-day shutdown of 95 to 96 during Clinton administration over opposition to the major spending cuts, and a 16-day shutdown in 2013 during the Obama administration caused by a dispute over implementation of the ACA. The other 7 shutdowns lasted 5 or fewer days. Okay. So here we now have some sort of data that we can at least start with a general analysis. So we know that in general, these things don't tend to last that long. Pretty simple. We can also see when we get to the data that there are some clear trends that we can identify, but the duration is a big part of this trend window. Most of them are very brief. Shutdowns disrupt many different government services programs, national parks, public institutions, reduce government revenue, reduce economic growth due to disruption of major services, Okay. So now that we have a general context on government shutdown, before I get into the next phase of our conversation, welcome to the live stream. Good to hang out with everybody. If you have any questions on what we talked about so far, perfect time, good interjection to throw them in before we get into the next piece, which is be looking a little closer at the profile and then getting into different ways to trade it. Okay. Taylor says, I'm new to this. Is this the same as what Pelosi does? I have no idea in what that's referenced to. Motorcycle Mark, what up? Good to see you. Shriek says GameStop days to cover over 10 days. How significant is this? We could take a closer look at that on Saturday. I'm going to keep this stream focused on the shutdowns. Jim says, Eric, this isn't statistically significant. 35 data points is a joke. You, as many YouTube subscribers as data points, insignificant. The funny thing there is based on what we consider significance doesn't matter. It really doesn't matter, right? Our job as traders is to find things that we can trade, whether or not it passes the base sample requirement of 20 samples or whatever N you choose to use doesn't really matter. It matters taking it in the context of what can we do with the information that we have. There's many things that you'll find in the market that you'll never have actually good statistical data around it. A great example of this, stock market crashes. Technically speaking, we see so few of those that it is completely folly to say they're statistically significant when they happen, but they happen. And there are absolutely ways to trade them, as infrequent as they are. So just because something doesn't hit an actual threshold, again, of base statistical significance, doesn't mean in any context that we can't do something with it. And from a practitioner's lens in the market, that's ultimately what matters. It's not writing some sort of paper or dissertation about the statistical significance of stock market, or I keep saying stock market, of government shutdowns. But that still itself can be traded, and we'll talk a little bit about it. Jim says, Eric thinks making money doesn't matter. He's just about content. That's actually hilarious because it's the exact opposite. But you're entitled to your opinion. Let us continue. So let's next take a look at a couple other sources and let's just see, right? So it says government has 20 funding gaps resulting in 10 shutdowns since 76. The longest was 35 days. So let's see if anything else sticks out to us here. We can see overall durations here. Actually kind of interesting that there was a stretch of them in this window where the funding gap itself was, and then when the actual shutdown occurred. That's generally interesting. And then all of a sudden we can see a pretty significant expansion in shutdowns, and then the government goes 16 years without a shutdown. So this is pretty interesting stuff to me. Now, let's see if there's anything else. We already looked at the last one. We know what the longest one. We know what happens. We know how they're resolved. We know what services are halted. We know what continues. Yeah, so good. After literally this first view of Wikipedia, you all already have a bunch of these context, which is awesome. So let's continue through this one, see if anything else sticks out to us. This is the political game of all nonsense, so nothing worth talking about here. Cool. Context is there. Beautiful. So let's talk now about what happened in the market today during this shutdown. How did the market react to this information? Well, we'll first start with a quick overview of the broad market, gain higher context. The first thing you can see, VIX right now is at like 1630 is where it closed. It closed down on the day. Emphasize that point. So let's grab VIX really fast. Here. Down on the day. So it had a gap up to start and then down on the day. Simple. So if we look at where VIX sits right now in context of longer term averages, so let's zoom this way out, we'll go 10 years. Over the last decade, if I just drop a point via the cursor on where VIX currently sits, it's literally below the mean. So then if I zoom this out longer term, which a lot of you will have seen, we know that the long-term average for VIX is about 18 and a half, 18 and 3/4. So looking here, it's also quite low. So what does that tell us? It tells us right now that the market isn't pricing this as much. However, one of the things that is highly tradable around these kinds of things, being government shutdown, is the fact that not much happens. More often than not much happens. And I'll give you some numbers around that concept in just a couple moments. But starting with VIX, we can see really nothing super topical going on here. If we take a look at SPY had a decent up day, closed at 668.5, up a little less than half a point, 0.34%. And we can see Qs is up about half a point, closing at 603, both up on the day. We can even see small caps were amazingly up on the day. So from a market lens, if we just had a government shutdown today and we see the government and we see the overall market reacting this way to the government shutdown, this in and of itself tells us actually quite a lot about the market's perception. Market doesn't really care. It does not really care. Then there's an even more interesting tool that I want to show you. And I want to talk about a couple of the higher level tendencies. So I'm actually grabbing my trade plan, which has all of this information logged in. And I just want to give you some stock market performance metrics around stock market shutdown. Or why do I keep saying stock market shutdowns? I'm a fucking idiot. Government shutdowns, Eric. Government shutdowns. In case you're wondering, it's government shutdowns, not stock market shutdowns. Okay. So out of all shutdowns since 76, stocks have been positive, drum roll, just about 50% of the time during the closure itself. So what does that mean? It's a freaking coin flip, dog. It literally means it's a coin flip. So then the next thing I was curious about is, of those instances that the government does shut down, what's the severity over that duration, right? So it's not just a function of whether or not it's up or down. It also does matter to us how much it's up or down. That becomes another tradable concept. This is the idea of an expected return calculation. Remember, you can have things that have a really high win rate that still do not perform well or lose money. When they lose money, albeit infrequently, if they lose enough to overwhelm the wins. So we don't just care about the frequency or probabilities, we also care about severity. So let's take a look at some of the actual price performance around the markets. So I have taken a bunch of snapshots starting with 60 days out from the shutdown, 60 days out, 20 days out, 10 days out, 5, 3, 2, 1 time of, and then that same breakdown for the following. And then I extended out to a quarter following, just out of sheer curiosity. And pretty much any instance that we saw of any sort of even moderate short-term pullbacks was immediately reverted prior to when the market or the government started opening back up. So that is another thing to pay attention to. So say, for example, we see, for whatever reason, the market start to trend down over the shutdown period. More often than not, when the government reopens, the market reacts positively to that catalyst. That's one of the more strong data points across the relationship. So performance during shutdown, generally mixed, coin flip, sometimes up a little bit slightly. Cool. Next thing after that is the performance on the day of reopening tends to be upside. More importantly than literally all of this is just looking at volatility. Volatility is hands down the more dominant force when we're trading or looking at something around stock market shutdown. God damn it, government shutdowns that impact the stock market. So I think one thing that is important to deliver about government shutdowns and the resulting impact to the stock market is literally the fact that it's effectively a nothing burger. It really doesn't do much whatsoever. So there are some very small effects that you can attempt to extract, but even the small effects themselves, unfortunately, also get consumed by noise. Because in order to even get an understanding of isolating these variables against the rest of the stuff that's going on, it's really, really weak. So what that means is during all of these other government shutdowns, during this government shutdown, there is a whole host of shit that's going on that's next to impossible to fully isolate impact of shutdown versus other things. So when we look at this broader scenario, the best way that I think about trading it first is around the volatility. And then the second is whenever there is the eventual reversion on the reopening, which an important element to that is all of the services that are paused during the shutdown, they essentially just delayed, right? It's not like they're gone. They're just delayed. And then when things get turned back on, there's typically a little bit of a backlog in some of them, but then it's not all that long until we're generally back to some element of business as usual. Okay, so what I want to do is take a look at the vol surface. So let me grab unusual whales really quick from here. And the reason why I'm using unusual whales here is actually really, really simple. It's just because it gives us an actual visual of the vol surface. So I'll grab SPY. SPY's plenty good. And let's take a look at volatility, and we can see how this in general behaves. Okay, so let's go down first too far to the surface. Okay, so the first thing I'm going to do is crunch this down. We really don't need to be out 800 days. I'm going to take it into like 90 days would be good. Yeah, we'll go like 90 days. And then strike range, we'll also keep these closer to at the monies. This is just to make it a little bit easier to see stuff. So we'll do what, like 780? Yeah, maybe a little bit more. That's fine. We'll do 800. Okay. So let's take a look first thing at where things seem peaky. So what I'm showing you here is days to expiration is this axis down here. So closest to us in this front corner is 0. And then as you go further down this axis, we get further and further out in time. So one of the absolute fascinating pieces of the surface is that we're not really seeing a ton of popping or peaking in the front. So when trying to trade volatility around stuff like this, the edge that you can extract from it is really very small. So for example, I traded 0 DTEs today like I trade most days. One very clear element for my entry is that the earlier day range was higher on the higher end of the band that I typically look for. So vol was a little bit high, but it cut off quick at the tails, which I thought was really interesting. It's one of those instances actually today where I bought wings for the straddle. It's just because they were so cheap. There was Normally I don't do that, but when they're super cheap, it's always like, might as well. Doesn't hurt anything too much. So most of what we're seeing here in terms of interesting elevation in the vol surface is further out in time. So again, we're not seeing a lot of action in the front vol. So let's take a look at SPX or SPY, whatever. Any of these are fine. And let's take a look at just the vol surface, right? So what I'll do is I'll grab my little workbook. I think we have something in here somewhere for a vol surface. See if I can find it really quick. There we go. So I'm going to move this off to the side just so that we can go a little quicker. And I will just throw in a couple terms. So we'll do like 1 day, then we'll do 5 days, then we'll do, let's do 10 days, and then 20 days. That'll be plenty. So 1 day term vol is 1446. 5 day term vol, 11.35. 10 day. And again, this is all stuff that the platform already does for you. I'm literally just showing you how to create your own little, not surface, but window of vol based on various terms. And then we'll do 24 October, which is kind of closer. I'm just going to change this then to 23 days. And then this one was 9 days. And 23 days is 15.21. All right. So let's take a look. We can see a really, really small kink in term structure, at least in the front. But it smooths out as time goes on. This is everything to do with what we're seeing right now. Even though what tends to happen around stock market shutdowns is nothing, it's still going to add some level of volatility to the market because it always could be something. But that's also why you're not seeing the variance between terms so high, like some sort of earnings event, or when Big Daddy J-Pal is talking about what he's going to do or not do with the Fed rates. Very, very different level of vol. So the kink here is super, super small. But this is another really, really interesting way to play volatility. Is there might be an idea between these terms in terms of the relationship of the vol. So we can see that the 5 day seems a little bit low compared to both the 1 day, the 9 day, and the 23 day. But the 1 day is going to be super, super fast. So trying to trade a change in vol in the front like that, very, very difficult, can be done, but you're also dealing with super, super low vega because you're so close in time. So when I'm analyzing just the broad market here and the way that vol is priced at the moment, pretty chill, like really pretty chill. The main focus that I'm looking at is really just any sort of vol potential. But what's way more interesting to me right now actually is earnings that's coming up. Pretty much it. Jock Strap Mishap. That is a hell of a name, by the way. Good to see you. Would you expect an unmitigatable boning of GME tomorrow? The good old bone cone. That actually, I think, gets more interesting as we get closer to the warrants. But again, we'll talk a little bit more about that on Saturday. I want to stick to the government shutdown, but I loved the name, so absolutely didn't want to skip over. Reese says, how does gold perform around shutdowns? That's a great question. The interesting thing with gold right now is, again, if we take a look at, well, we can use spot. Well, I don't know. Are you trading gold futures or are you trading ETFs? Because based on that, they'll have slightly different profiles. Futures, yeah, cool. So we can take a look at the term structure. The term structure, as always, will have quite a lot. Okay, so we can see vol here is on the 1 day 15.9, on the 2 day jumps to 18, then pops back down to 15.88, 17, 17, 17.75, 18.5. So it kind of bounces all over the place. Now, when we see this kind of behavior with just term structure in general, again, this tells us that gold right now is kind of on another program. And that's honestly what I see here too, just because of how aggressive gold has been performing, right? I think when it comes to the shutdown itself, it didn't do much for gold on the day. After hours were about flat, and gold has been in this broader trend. So I imagine the larger force of gold near term will be this. Over prior shutdowns, I don't know offhand. I can take a look and see how gold tends to perform. I just have to look that up because I don't know offhand. My guess is it will be similar to what we saw before with respect to coin flips. And gold is also so susceptible to other factors. So let's see. So it looks like a modest increase. So from the 1990s to 2010, small upticks around the uncertainty. This I'm looking at ChatGPT because I don't go back into the 80s for gold on mine. In 13, gold pretty stable. 18, 19, gold gain about 3 to 4% during the 35-day window, which again, that's likely not directly attributable. So yeah, it looks not affected overall. Aaron says, also insignificant. Trying to guess direction is like flipping a coin, Reese. I honestly don't disagree with that. Yeah, I think that that's fair. I think in a lot of instances, that's correct. I think there absolutely are instances where some traders are really good at predicting direction for different time frames, but especially short term. Who the fuck knows? I honestly think that's a really, really good point. I think in the near term, not much. But see, that's the other thing. Aaron follows up and says, sell vol, make money, row down. The problem is like that doesn't work as well either, right? Like the perpetual sell vol isn't a super solid way to do business either. So yeah, I think it's important to remember. And again, people that say stuff, you know, that trying to guess direction is like trying to flip a coin. That also shows a complete misunderstanding of what traders are doing, right? I just was talking about expected return before. So you can have strategies that literally win a minority of instances. But if the severity of those instances is enough, then that still is profitable. It's really, really common where traders, especially traders that have bigger egos, really care a lot about win rates or focus on win rates. And it's just because the prospects of being wrong can be difficult. And for most traders that stick around for a long time, you kind of just get used to losing. It's literally just part of the game. It's okay. I feel like it's the same thing with basketball players, where if you watch or listen to Kobe Bryant has an insanely strong performance. But if you listen to him talk, he'll talk about all of his misses, all of the game-winning shots that he didn't hit that he wanted to hit. And that's kind of part of it. So I think detaching that mentality and focus on win rate is only to literally every trader's own benefit, provided that it's in context, right? Because if you have a bad win rate, but you also have bad dynamics and severity of your wins and losses, yeah, I mean, that's just a hyper losing approach, which that just requires a pretty significant change in what we're doing. Aaron says, who said perpetual selling vol? A little nuance in thought goes a long way, Eric. Yeah, I appreciate it. The only thing I can go off of, Aaron, in case you didn't know, is what you write. So you might have other thoughts going on. It's hard to tell. But when you say sell vol, make money, that sounds like we're talking about primarily selling vol, which, again, on the retail side, tough way to do business. Can be done, but the overall edge that you'll extract from that kind of approach will be not super fat. And again, it's very similar to the momentum factor. So, yeah. Now, the other thing I want to talk about really quick really is just a quick view of the futures markets. A lot of them had very, very interesting performance today. So if we take a look at bonds, if we go across the curve, so ZN to ZT, ZN was up actually pretty strong on the day. So we'll zoom in on those two specifically. Let me grab a different grid. It'll be a little easier here. So there's ZN, ZT, and then we'll add B. So looking across the yield curve, 30-year, relatively mild day, hung right around 116, low 116s. It did pop briefly above 117, came back down, so pretty sideways, not a significant day. Then looking at 10-year, bit more active, and after hours, actually, it's rallying a little bit more, which that's kind of interesting on a separate note. And then the 2-year had a very one-sided day. The thing that's most interesting to me looking at these is actually the relationship between the body candles and then the wicks. So you can see on the long term, big wicks, smaller body. Then you go to a 10-year, bigger body, smaller wicks. And then you go to the 2-year, no wicks, effectively. Just big upside body, small wick to the downside. So the front of the curve is obviously behaving much more directly. And this is likely to be a more interesting near-term idea as well, especially if you think more broadly that bonds are a little bit underpriced, which is a pretty common idea. It's really up to you, as always, to figure out what you feel is the case. But another potential tailwind. Aaron says, literally a risk premium called VRP. What are you going on about? I don't know what you're going on about. Don't tell me that you think VRP means that VRP always exists. That's not the case. There's actually a lot of periods where VRP is inverted, and then you can trade the normalization of VRP. So again, it kind of goes to a very amateur level understanding of vol, which is quite interesting, actually. Aaron says, hard to make money selling vol, but easy to predict direction. Okay, now I understand what's going on, because if that's what you internalized from what I said, this is very clearly one of those instances that there's not really any successful way for us to communicate. So let's continue and let's take a quick look at the other primary like alternative markets. So looking at Bitcoin, let's take a look at crude oil and see what we see. So crude oil down and still continuing down. I actually did a podcast with Doomberg not that long ago where it was expected to be like Doomberg was talking about crude in like the 50s, which is kind of crazy to me. But we'll see. I mean, it's definitely hovering down towards the bottom, but over this range, it's been pretty two-sided. So this is, as we were actually just talking about before, with respect to like near-term price expectation, absolutely no idea either way. The cool part is, I do think once we see some kind of stronger directional trend or breakouts, then that likely will be pretty tradable in terms of the follow-on behavior from crude. Bitcoin has been on an absolute tear, doing the Lord's work for a lot of people's portfolios. Now, we were also looking at ETH not that long ago. And ETH is running sideways here. So ETH had this crazy parabolic increase. And then it's been rotating sideways, starting to break down a little bit. So I think, at least the way that I'm trading it, is still long-term long Bitcoin. That's via the coverage strangle. And then the ETH position that I had on, I've taken that off. I mistimed it as per usual, but there's no perfectly timing pretty much anything. This in general was a really solid move though. So, oh no. Oh, I was like, oh no, Aaron, we lost Aaron, but it looks like Reese has been working overtime. Good job, Reese. I appreciate it. I have no problem interacting with those folks, but as soon as you guys think that they're starting to get like distracting or something, then I really try not to stifle anybody's communication. So even if it's people that are kind of lame or nasty, as long as they're being generally within bounds, that's all good. Lauren says he'd be great for engagement if he wasn't so boring. Probably bad day on the market. Well, it's just, I've learned long ago that like different people will have different opinions for different reasons, and you will find lots of people, especially when you do something like this, right? Go on some sort of YouTube and start doing this. There's always going to be people that have problems with you. The one thing that I always keep in mind, and I always remember, it's kind of why they never really bother me, is because I literally have never had somebody that is like genuinely happy in their life or genuinely doing better than me in their life that would comment down. It just, they don't do that, right? People that are happy or people that are doing really well just don't do that. So yeah, I never really pay attention to it. TCM said he needed to go. They made out of bounds comments. Oh, okay, cool. Yeah, honestly, I wasn't really paying attention, but then thank you even more so, Reese. Really appreciate it. Yeah, as soon as stuff starts getting out of hand, then yeah, definitely. Wesley, it looks like we have another. So we had Taylor that went to Aaron that is now back as Wesley, which is awesome. Wesley says, everyone is below you with your 23-person channel. Again, that shows that you absolutely have no idea what I actually value, which is also entertaining. Well, Reese says, bro, has 20 accounts. The funny part about it is that they're engaged enough to just think what goes into that mindset. Think where you have to be in life in order to be like, I want to talk shit so bad that even though this one got blocked or timed out or whatever, I'm literally going to sign into another account or make another account to continue. It's absolutely awesome. So giant fan. But yeah, it looks like there are plenty of accounts for our boy, which is fun enough. Okay, so anything else that you guys want to take a look at with respect to the shutdown stuff? I did ask Gemini to do an analysis literally just to see how it framed it. Here, let's take a look. And again, this is one of those instances where what I like to do is see how this behaves against my research, right? It's always a really good way to validate what I'm looking at, because there's very frequently a lot of context that's built over time, and it's a great way to punch holes in the research that I'm doing. So I want to give you the prompt that I gave it. I haven't looked at this yet, so we'll take a peek in a second. So I essentially misspoke here, well, mistyped, typoed, said, it's supposed to say analysis, but AI is pretty smart. So it says, conduct a comprehensive analyze, meant to be analysis, of previous U.S. government shutdowns and summarize their traits, include an overview of market and sector performance, finalized with suggested trading methods to capitalize on the effect. So let's see what this says. If it says anything other than not much happens, that is a little concerning to me. Let's see. So this is the anatomy. We can skip that. We already know most of the historic performance. I like the table. That's actually pretty nice. Yeah, that's legit. So we can see what the expected costs are here. That'll always be kind of difficult. Furloughed employees. I kind of like this. Wow. Would you guys have guessed that? Wait, why does this say Clinton? Oh, because it's Senate and then the House. Got it. 5 days, 800,000 employees furloughed. Whereas, let's say 35 days, the longest end of the curve, 380,000. So I wonder if these were also periods where they purposely kind of double tapped it or used it as a potential catalyst to do other stuff. Because this, I think, this is super interesting. Super, super interesting. All right, let's continue. Here we go. Market behavior. Despite clear economic disruption, political dysfunction associated with shutdowns, comprehensive analysis of market data reveals a striking counterintuitive conclusion. Broad U.S. equity markets have been remarkably resilient, which has been the case for some time now. Investors have historically treated these as political theater, like we're literally exactly what we're talking about, rather than fundamental threats to the economy or corporate profitability. Thesis strongly supported by quantitative evidence. Yeah, okay, so that broadly aligns. Multiple independent analysis confirms S&P performance during shutdown on average flat to slightly positive. So since 1976 shows an average return ranging from flat to up 0.3%. And again, remember, a lot of these are very brief. So when interpreting this information, it's important not to anchor off of the extremes, which a lot of times our brains inherently want to do. So we kind of have to make sure our brain is calibrated appropriately, right? So when this is saying that they range from flat to 0.3%, that's also with a majority of these where the shutdown is 5 days, 2 days. So S&P doesn't necessarily move that much over that duration. The other thing to keep in mind that would be cool if this does talk about, which I'm curious, is if it gives volatility during that period, meaning total ranges. That I think would be even more interesting than like the actual return. More remarkably, since 1990, S&P finished with a positive return during every single government shutdown. So again, this is a good callback to what we were talking about before, right? Which is we're having a conversation around a small sample size, because this is a small sample size, no doubt. When we're attaching some sort of confidence interval to something that is this small of a sample size, very difficult to do. And whatever you do would be relatively inaccurate. But just because we can't attach a significant confidence interval doesn't mean that it still can't be traded. A lot of things that we try to trade as traders are things that are not going to be fully defined. And that's why there's an opportunity in those kinds of things. And that's also why in the things that are really well defined, they more often than not don't have massively fat opportunities. A great example is variance risk premiums. That's not like some money printer. And it's because everybody knows it's there. So things that are really well known and systematic in nature, more often than not, aren't going to have these really thick edges to extract. But this in and of itself is an interesting data point that in general, despite during these periods, some change in volatility since 1990, all of them, the market has landed up. Because again, remember, 1990, there's some decent market behavior during those periods. Okay, during the 16-day shutdown of October 13, S&P was up 3.1. During the 35-day shutdown, it was up 10%. So there could also be some sort of perception of the longer it goes, the bigger the move. But again, you'd have to adjust it for the duration. That would be important because it's essentially double the duration, but still more than double, way more than double the move. Furthermore, the performance in the aftermath of a shutdown resolution has been consistently strong. Historical data show that the 12 months following the end of a shutdown, S&P was higher 86% of the time, with an average return ranging from 13 to 17%. Suggests that investors not only look through the immediate disruption, but also view the resolution of political certainty as a bullish catalyst. This is, again, a callback to what we were talking about before. One of the actual tradable effects around government shutdowns. To recap, one of them is volatility, both changes in front vol and then relative vol plays across the term structure. But then also the actual price behavior on the day or around the time frame whenever it finally comes to a resolution. This apparent paradox whereby negative economic headlines coexist positive performance highlights a dynamic. The market does not price events in a vacuum. Government shutdown is rarely the primary driver of market returns like we talked about, and it's also very difficult to isolate it. Instead, impact is weighed against the prevailing macroeconomic backdrop, Federal Reserve monetary policy being the most dominant factor. Severely question that. I severely question this. Government shutdown rarely the primary driver of market returns. I agree with that. Its impact is weighed against prevailing macroeconomic backdrop, federal monetary policy being the most dominant. I struggle with that. Maybe if it's saying the monetary policy is the most dominant in the macroeconomic lens, but I would expect earnings to be way more important than this. Curious. 1819 shutdown serves as a case study. S&P, yeah. Okay. When does the market start to care? While markets have historically shrugged off resilience, not infinite, relationship between duration of shutdown and market impact is nonlinear. Political theater thesis holds for short-term or short-lived events, but the risk of significant market correction grows as shutdown extends beyond a 1 or 2 week time frame. Historical data from earlier periods before the markets became fully conditioned to modern shutdown playbooks show a clearer correlation between length and negative returns. 10-day shutdown in 76 coincided with a 3.4% decline in S&P. 11-day shutdown in 79 saw a 4.4% drop. Interesting. So we have a nice little table of duration and then when the event was. So this is something you guys literally could screenshot and just drop into your trading plan, right? Now you have a I'm going to drop it in the Discord for you guys so that you can hopefully have a slightly higher resolution version. But that's also really cool, right? Because the amount of research you can do with AI is so unbelievably cool and such an accelerator for everybody. Because the research that I did related to this previously, like this took, how long did this take? Like moments. It literally took a couple minutes, it says. That's so cool because when I'm doing this research, it takes quite a bit longer than a few minutes. We read Wikipedia for a few minutes just to get context, which is pretty neat. Let's see. Okay, so sector level stuff. Defense and aerospace are the most exposed. This makes complete sense. A lot of these companies are heavily dependent on different kinds of government contracts. So an expectation of some sort of change is quite high. I would couch that with the fact a lot of those contracts are likely deemed mission essential. So production of key pipeline weapon systems, I would be quite surprised. I'm sure some of them would come to a stop, but I imagine the majority of them would continue to flow. IT government contract services, which is the first casualties of a shutdown. So let's take a look at Palantir. Up 1.4%. Looks like Palantir didn't care. Oh yeah, that other ticker that I was looking at before was actually a new contractor or a new drone contractor. Damn it, I forgot the name of the ticker. I was literally looking at it whenever we started the stream. Defensive rotations, so utilities, staples, healthcare. Healthcare has been on a tear, by the way. Healthcare, ever since we had that recent news of Pfizer being able to duck the Trump tariffs. Take a look at that. So if we double click into Pfizer, bam, another 6.8% move on the day. I did not trade this one, unfortunately. I traded the news yesterday. This was a much stronger move than I was expecting. That one got me good. Let me see really quick. D-Pro, that's it. So D-Pro, which is Dragonfly, was selected to supply the Flex FPV modular drones to the Army. So they're essentially going to build an entire FPV ecosystem, which is super cool. I'm very stoked for this. So I'm probably going to finish rounding out a ratio call diagonal in here. I literally set it up today after the price appreciation on the gap. So it's still, I would consider a higher risk entry. But I also just, as you guys know, from like the military backgrounds and still doing the reserve side of stuff, I just really like this kind of technology as well. I think it's massively important. So let's take a look at DPRO before we wrap up, just because I want to look at it together. Where's the fucking company website? It's always bad when you type in a ticker and like you can't just immediately get to the website. It's like a bunch of other shit first. But that's also, I guess, kind of a good thing because, well, it means it's not overly saturated yet. All right, so September 30th, that's where this came out via Newswire release. All right. So let's see. I want to flip through this really fast. See what they got. 80% of US public safety drones are foreign made. Yeah, that's not good. 100,000 UAV jobs projected by 2030. That's a really cool rising gig as well. So market last North American built systems. And again, that's just a general security element. 25 years of it. So in case you don't know, when the reason why domestic production is kind of important, especially for stuff like this, if you don't know, we share a lot of our aircraft and a lot of our weaponry with partner countries. But almost always we tune them down a little bit before we give them over, sell them, I should say. And that's always to make sure that the US produced elements still maintain always an edge of some sort. But then also in case there's some sort of malfunction that can place that asset in front of enemies that we wouldn't want potentially getting it. So say, for example, we sell a jet to a country. And let's say that country is in an engagement with Russia or China or some of these, near peer competitors. What's dangerous is if it's commensurate level technology, there's a malfunction or it gets shot down, and then those countries are able to reverse engineer what's in there, and we had no control over how the downed aircraft was managed, handled, that kind of stuff. So that's a pretty big piece of the puzzle. So that's why this kind of stuff matters. The drone scenario, I actually imagine, is also equally important just because of being able to reverse engineer what's in there. So let's see. So they have a bunch of patents, NOAA compliant platforms. So they're full stack, which is cool. So they're also in a lot of industries, which is pretty cool. They have the Commander 3XL, Heavy Lift, Flex FPV, and Apex. All right, let's see. Look at their revenues. Dipped down in Q1 of 25, but Q2 looks pretty good and compensates for it. Cost of sales is going up. That also doesn't surprise in terms of the tariff scenario and whatnot, because there's still going to be a lot of components that will be manufactured. If you're trying to manufacture the important components in the US, then it becomes even more important to do this cost efficiently, to manufacture everything you can that isn't that in other areas. Gross profit, $500,000. That's good. Gross margins is pretty good. So over 20%. Operating expenses are growing pretty quickly. Loss is contracting, which is good per share. Yeah, so I mean, this is the kind of company that is really interesting, because getting a government contract at this point is kind of a significant turn. So it's a Tampa facility. 23 patents, 1 pending. That's a very red suit. The very red suit. I don't know if that bodes well. I want to see if it has anything in here about details of the deal. I don't see anything in here yet. That'll be super interesting, but too early. Reese says, off topic, is the point of control volume profile the average from prices taken in? It's not an average, it's a weighted average. So what it's doing here is it's saying where did the volume happen and at what price. So then it'll show you not just the specific level, but level and price combined. It's actually what makes it a pretty useful metric. Oh yeah, let me take a look at one other thing before I jump, because I'm actually curious if there's any indication that somebody knew this was coming. 26 September. Looks like pretty strong call premiums, $560,000 worth. Just out of curiosity, decided to go a little further back in time, 30 days, just to see what the peak was before that. 174K was the peak. And then there's 621,000, 28th September. In case we're wondering, let's just take a peek at when this came out. Oh, shit. 30 September. Huh. I'm sure that's just a coincidence. Nothing to see here. Let's go to 28 September really quick and let's see what was going on there. Huh. This shit's fucking comical, man. Literally comical. Someone always fucking knows. Look at that. Look at how long that premium is for this front expiration. That's fucking hilarious. Yep, somebody knew it was up. No big surprise there, especially with smaller names like this. This is exactly where this kind of trading stands out the most, just because it's much easier to identify because it's not shrouded in noise. But I mean, it's still very, very long on the front. So just for context, out of sheer curiosity, let's see what those options would be at. Can I go back? Yeah, let's go back in time. Let's go to 28 Sep. Want to see. So it looks like the 7.5s in different expirations. 7.5, 5, 7.5, 26, 27. So that's covering tracks a little bit better than doing everything in the front. That part's good. 6 days of open interest increases, 12 days of OI increases here, 15 days of OI increases here. So these motherfuckers knew. So let's see what these 7.5s. The average price on those 7.5s in 2027 is $1.26. Let's go to 2027, 7.5s. Call it 305, 310. So doubled their money. That's not so bad. So that 430 just turned into 860 plus in the course of 2 days. It's awesome. That's the cool part about markets, is that kind of shit can happen, especially if you know or you know somebody that does know. All right, gang, that wraps me up. As always, if you have anything that you want us to take a look at, let me know. Be an outlier. I'll see you guys later.